If you have subscribed to my channel and watched my videos, then you already know that I trade crypto, try to find the best trading strategy algorithms, and have a special interest in trading bots, since they take away the human factor and solely trade on the developed trading algorithm. You also might have already guessed that I heavily depend on Binance as a trading exchange, because they are very decent in technical reliability and have large amounts of volume that provide liquidity. Also, they have a very good API to fetch data from. And lastly, the bot that I use is compatible with the Binance exchange as well. Welcome to part 1 of probably a 3-part video series where I will be discussing the factors you have to consider when using a new crypto exchange. The second part of this series will be more technical, and there I will use the CCXT library to get more technical information that will help you at deciding which exchange to use in the future. Now, before I continue with this video, I also have to admit that a lot of the contents in this video are solely based on the specific situation in my case in the Netherlands. But you can always use this information as a template or outline and apply it to your own situation and country as well. Just be sure not to overlook things or take things lightly. So, why did I make this video? Well, the current problem is that Binance for some reason is going to leave the Netherlands because they cannot get a license to operate in this country. They will stop providing services somewhere around July, and I can only extract my assets at some point in time there. Binance made a statement where they announced to leave the Netherlands according to the following reasons. And I will quote, "Binance has been in a comprehensive registration application process as a virtual asset service provider with a Dutch regulator. Although we explored many alternative avenues to service Dutch residents in compliance with Dutch regulations, unfortunately this has not resulted in a VASP registration in the Netherlands at this time. Binance will continue striving to obtain authorizations to provide our products and services to users in the Netherlands." Now, as an addition, Binance is already compliant with EU standards on the prevention of money laundering and financing of terrorism as evidenced by its registration in other EU countries, including France, Italy, Spain, Poland, Sweden and Lithuania. But as far as I can investigate, there is no clear explanation why our regulators do not authorize Binance to serve our country. I suspect it has something to do with politics and the fear against crypto, but I might be wrong. Oh, and by the way, our Belgian friends have the same problems here as well, so we share the same fate here. So these are the facts, and now I have to decide what to do next. Apparently I will lose the ability to trade on Binance very soon. Hopefully I can keep extracting data from their exchange, and am only prohibited trading based on my KYC information. But my main question for now is what alternatives I have for trading, and especially for using trading bots. For now I have thought of the following solutions. And the first one is waiting for MiCAR, the EU rules for crypto assets. And eventually I will think it will come to this and Binance is allowed to operate in the Netherlands again. But I have no clue on how long this will take and I'm very impatient, to be honest. Now, the second thing I can do is using a VPN to access Binance. But maybe I will get into trouble if I do this. Maybe I will be suspected of money laundering and tax evasion, so that's a no-go area for me at the moment. I just don't want to risk this. And it is probable that Binance is also blocking people based on their KYC registration, so VPNs are out of the question. The next thing I came up with is to move all my funds from Binance to self-custody wallets and invest, no trading at all. And this could be a viable option. It will certainly lower my stress levels of always watching the market movements. And the time I use for trading can be spent on other things then. I will also save maintenance and VPS money for my bot, but the main disadvantage is that I will not have as much fun and opportunities as before, and large bearish market cycles have to be endured because I'm for the long run here. The last thing that has come to my mind is choosing a national or locally approved exchange for bot trading. This keeps the excitement for trading and search for better algorithms for better future opportunities, and it also keeps me in touch with the news, development, techniques and social contacts. I also get the possibility again to get out of the markets when the bears rule, and that way prevent large drawdowns. So if challenging my creativity, testing, tweaking and hobbying are my thing, then this suggestion is probably the best option for me at the moment. Now the question is for me, which factors do I have to consider if I want to use this last option? And this is some sort of a challenge, because there's no manual, instruction or recipe on what to do here. So I came up with the next things to investigate before I move all my funds to that other exchange. And the first thing is of course, which exchanges are out there? Well, on CoinMarketCap there is a good overview of all the exchanges and their volume. And there is also another list available on CoinGecko based on trustworthiness, which I can use to determine my next platform. So I think there are enough alternatives to choose from. But there is a small problem, because the exchanges mentioned on these lists are not by default allowed to provide their services in the Netherlands as well, like Binance. So for that to happen, they have to register at the Dutch National Bank or the Nederlandse Bank. So let's go over to the website of DNB to check which providers of crypto services are allowed to do service in our market. I want to be certain that the new exchange I will use will be sustainable and will be active in the Netherlands for a long time. Now you might wonder, what is the DNB in the Netherlands? Well, the DNB has the obligation to supervise providers of financial services like crypto service providers. Crypto service providers operating in the Netherlands must register with DNB. If a company is not registered, we can impose a fine. In 2022 we imposed a fine on Binance, for example. We supervise registered crypto service providers, but only to a limited degree. We check whether they are doing enough to combat money laundering and that they comply with sanctioned regulations. We do not check whether crypto service providers are financially sound or not. Currently, there are no rules to protect people who invest in cryptos, but international regulations are on the way. Stricter rules and supervision can never eliminate all risks, however. There are limits to what supervision and regulation can achieve. Anyone getting into cryptos must be aware of the risks. Read more about cryptos and our position on cryptos. Luckily for us, the DNB also has a register that anybody can query to see who these registered service providers of crypto assets are. And you can see here on the screen all those service providers at the moment. Now you can imagine that if you check all the crypto exchanges in this list with the lists on CoinMarketCap and CoinGecko, the options are suddenly very limited here. Now, nobody is going to hold you from opening an account on, let's say, Huobi, but if the DNB is going after these guys as well, because they get big in the Dutch market, then it is time to move your assets again, I guess, because the DNB will go after them as well. Another thing we can think about is the Dutch depositogarantiestelsel, or Dutch Deposit Guarantee Scheme. It is a scheme that protects the money held in Dutch bank accounts, and this automatic protection is from 1 cent to 100,000 euros, and it applies per person per bank. So, should a bank go bankrupt, then the DNB will ensure that you will get your money back. Now, a crypto exchange is not a Dutch bank, but it sure would be nice if there is some form of guarantee that you can get your money back when this exchange goes bankrupt. But unfortunate, as far as I could search, there was no Dutch crypto service provider that fell within this guarantee scheme. Now, I have found out that Bitvavo has some form of account guarantee up to 100,000 euros for stolen assets, but it is a service from the provider and not a governmental guarantee. Maybe in the future, when the big banks are going to offer similar services as these crypto trading platforms, then a lot of things will change. But until that time, you will probably lose your money if you use one of the current crypto service providers and it goes bankrupt. So if you think about it, nothing is going to change. I mentioned it a couple of minutes ago, but the exchange also has to have some kind of trustworthiness. It's no use to create an account on a very dubious exchange somewhere in China, Brazil or whatever, and have absolutely no guarantee that you get your crypto off of the exchange again. Now, in the past I did a lot of stuff with masternodes that were running crypto staking coins, and I used exchanges like Crex24, CryptoHopper, or whatever they were called. It was so long ago I cannot even remember their names anymore. But the fact is that they are all gone now, just out of service, decommissioned, rug pulled, or other causes, having no way of ever getting your crypto back again. Which brings me to another factor of trustworthiness, and that these are the size, age and popularity of an exchange. And yes, the bigger they are, the harder they fall, and the more noise they make and people get hit. That counts for crypto exchanges, but also for banks. Remember though that it takes a lot of effort or a huge amount of incompetentness to let a big exchange stumble and fall. On the other hand, nobody knows how much small and unknown exchanges has kicked the bucket in the last couple of years, and how much money was involved there in total. And you don't hear about it because it's not news. And I know, because I also lost a lot of money with the fall of these big and small f***ers. But still, even with all these experiences, from my point of view, if I have to choose, then at least I will choose for big. It gives me some sense of comfort, but absolutely still no guarantees given, from me of course. And that brings me to another factor that I have to take into consideration, and that is the volume of an exchange. Volume in this context is a means to quickly get into and out of the market with my trades. It's no use to open a trade on an exchange that has no sellers, and also to have difficulty to close an open position when there is no buyer at your preferred price. In other words, the order book should have enough demand and supply to have a market where buyers and sellers can easily fill their position without a large spread. Now, smaller exchanges can have this problem because they have a lack of enough market participants. And this factor is a direct consequence of the size, age, popularity and customer base. And talking about volume, the amount of pairs of course is also very important when choosing an exchange. The more is not always better, but an exchange should have at least provide you access to the top 10 or top 25 of the most popular pairs to trade. And you have to think about the volume factor here too, of course. Now personally I prefer to have 50 or more high market cap pairs on an exchange. But sometimes that is not always possible and you have to do it with what they got. And another thing here, that is the importance of the quote currency. I prefer to have a quote currency that is a stable coin like USDT, USDC or BUSD. Now an exchange can also have major currency like USD or Euro or another national currency. And even Bitcoin as a quote currency can be good if you aim to have more Bitcoin instead of fiat money. But remember here that the Bitcoin price can go down as well, if you compare this to a stablecoin. I also look for an exchange that supports spot and futures trading, so I can trade in up and downward movements. Now futures trading is actually not that common with these service providers, but it sure is a nice addition if you have a trading platform that can provide you this. Another thing you have to keep in mind are the costs of the exchange. For example, trading fees, purchase fees, deposits or withdrawal fees and holding fees. Now you cannot really compare these because each exchange has different fees, and there are also specific rates on volume, amount of trades, discounts, VIP rates and more to have to be taken into consideration. Also, some exchanges even charge money for buying, selling, withdrawing and keeping their crypto safe as service costs. Sometimes very untransparent or even not shown on their site until the very last moment. I will try to avoid these exchanges unless they have other benefits that are worth these costs, but this is a highly personal thing here. Now I'd like to trade manually from time to time as well. This way I keep my trading skills sharp and also keep a feeling to the current market sentiments. So a good interface for trading is a must, and I know exchanges that for me have very confusing interfaces. Other ones have simpler interfaces for buying and selling, and some have more professional looking interfaces with more options available. Personally, I like these latter interfaces because these give me more control over my trades as well, and also more information and feedback on the current market circumstances. It is nice that an exchange has very low entry barriers for making an account, KYC, and buying or receiving your hard-earned crypto so that you can trade on the platform straight away. But you have to also take into consideration an exit plan. How easy is it to withdraw your crypto off the exchange again? And how quickly does it respond if you manage to execute your extraction from the exchange? Is there a cooldown period, or do people have to authorize your withdrawals? How long does it take to see your withdrawal on the blockchain? And how much does it cost to get your funds out of there? All these things have to be taken into consideration as well. For example, when rumors got around that FTX and Celsius were having problems, some people were able to get their money out of the exchange. But at some point the bank run got so big and so much attention that the exchanges suddenly stopped withdrawals. Technically stealing your crypto because you were not able to get it back off the exchange again. Now keep this in mind when you use a new exchange. Now you have to note that this risk is always with any exchange, and even banks have this problem. But if you hear rumors about an exchange and that they are under some sort of scrutiny, then it's important to have that exit plan on your shelf. And hacks. All exchanges can be hacked, from the outside, from the inside, supply chain hacks, spear phishing, stupid mistakes, and whatever attack vector you can think of. Hacks are a fact of life nowadays, and you should always keep in mind that something or someone is aiming at your crypto, even on large, assumably secure exchanges. So if you have to choose a new exchange, then investigate if it was ever hacked and how they resolved this situation. Like being communicative and transparent in what happened, how they mitigated the hack and will prevent this in the future, and also how they compensated the users and more. And finally, I get to the last subject I want to investigate for a new exchange, and that is the API. Now, an API acts as a messenger between different software applications and enabling them to send requests and receive responses from each other. It is a set of rules and protocols that allow different software applications to communicate and interact with each other. And the API is the intermediary between your bot and the exchange, and there should be a good fit between these two. Now, because I use the FragTrade bot, I use the Python CCXT library. And this CCXT library for Python is a popular open source package that provides a unified interface for interacting with various cryptocurrency exchanges. It also simplifies the process of accessing and interacting with different cryptocurrency exchanges by providing a consistent set of methods and functions. So to put it simply, having a good exchange API is crucial for the CCXT library for standardization, compatibility, reliability and extensibility. And even if you use a bot that does not use the CCXT library, then there should be a good fit on the exchange's API. So finally I'm done with this list. There are certainly things I did not think of, and you, my viewer, maybe did. So if you have something I did not mention here and you think it's really important to take this into consideration as well, then please put it in the comment section below so that everybody can benefit from your input. Many thanks in advance for that. Now again, these are the items I consider when I'm hopping over to another exchange after the moment Binance stops their trading services to me. They are pretty high level and need to have some desk research to give you a good insight in the possibilities. I hope that at some point the European regulations will allow Binance to operate on all European markets again, because at this moment the European Union is too scattered on these regulations, I think. And in my follow-up video I will show you how you can use the CCXT library to investigate a crypto exchange further for use with a trading bot. I will try to receive exchange information with this library and then make a decision on which exchange I will start the automatic trading bot on. So, see you in the next video. Goodbye!